From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Good afternoon. This is the COB. It's great to have your company this afternoon. Still tongue-tied to start the week. 4 days off and you start to lose the touch. Well, if I ever had it at all. But I'm Kyle Rodder and I'm with, of course, Danny Akuye. And Danny, it's, well, a very, very positive start to the week. It looks like we'll finish somewhere around 1.2% higher.
Yeah, it's looking that way. And really, given that we had a mixed lead out of Wall Street last night, I think our colleague Andrew Kagan was right. Maybe everybody had consumed too much sugar over the weekend and they came off to a flying start. But yeah, really good performance today. And some of the sectors that had been underperforming over the course of last week really started to put in a better performance. But just having a quick look at the sectors, it looks to me that materials, mining, stocks, the big miners and gold really shined today.
Yeah, absolutely. Well, let's hope we don't get a sugar crash tomorrow. But that takes us to the three themes today, and we might pick that up straight away because a few of the points you just made there are part of our three themes today. Gold continues to glitter, of course. We have had an upped offer for Newcrest Mining from Newmont there. We'll get across that a little bit more in a second. Green across the screen, every sector finishing higher today.
Yep.
Danny, and well, I suppose you just had a great chat as well with Jason Ireland from McGrath Nickel, because in the macro world, it probably didn't move the market too much, but we did have a little bit of a rebound in consumer and business confidence.
Absolutely. I mean, the market came out of the gates quite strongly, so it really wasn't led by those figures, but nevertheless, that positive consumer confidence read, it's still low, pretty much in, I suppose, not in the optimistic level, but as we were just discussing with Jason, the consumer is really, really looking for, I suppose, the pressure to come off them in terms of higher interest rates. So the RBA pause really supported them well. But also we had those China inflation figures, which I thought were quite interesting, that recovery is really not coming along in such a robust fashion as some people were expecting. And also we had the Japanese central bank saying they're going to remain very much not putting their foot on the pedal, so they're not changing their monetary stance, and also the Korean central bank. So probably all of these factors are quite supportive of maybe risk off, but also liquidity and stimulus coming back into the system. And as we were saying, maybe that's why that little crypto piece of gold took off today. Yeah,
well, that was above 30,000 too. So we'll see if that narrative starts to really catch, I suppose, a little bit of steam, if you want to call it that, when US trade comes around. But let's look at some of the sectors now, and we'll start with metals and mining because, as you alluded to before, Danny, it was a day very much underpinned by strength in the metals and mining. It was a broad-based gain, but certainly led by some of these names. Fortescue Metals up 2.74% to $22.14, so it's back above that $22 level. BHP also edging higher and testing around $46 a share again, but well, as you can see on your screen there, and we'll emphasise a little bit more perhaps because we'll take a look at the gold miners specifically. Newcrest Mining up by 5.25%, and it was a fairly broad-based gains for gold. We'll talk about that with our guest coming up. Also just wanted to chuck in there too, just the agri stocks for the day, because another story that we had that was China related that didn't move the market, but some signs that potentially some thawing tensions between the Australian and Chinese governments, possibly those tariffs imposed on barley. 80% of our barley exports actually could be removed. There was expected to be a World Trade Organization decision on that over the next few days. Well, it's seemingly the case that we might be able to work that out bilaterally. China signalling that it could potentially remove those tariffs. But well, let's get to that news of the day, shall we?
Yeah, and, absolutely.
Well, take us away with that Newmont bid.
Yeah, so Newmont has put in a best and final offer for Newcrest. That's on the table. And the revised bid values Newcrest at 32.87 per share, a 16% increase from its last offer. Newcrest has opened its books following the improved bid. Its shareholders would be entitled to receive 0.400 Newmont shares for each Newcrest share held. Newmont has indicated that the revised proposal represents its best and final price in the absence of a competing proposal. But we've also had some news in the rare earth space, which has been quite out of favour, haven't we, Kyle?
We have. Arafura Rare Earths said it had signed an offtake agreement for at least 5 years with wind turbine maker Siemens Gamesa Renewable Energy, and it's pushed the Perth miners' shares higher. Arafura will supply 200 tonnes per annum of key elements, neodymium and praseodymium for the Nolans project in the Northern Territory commencing in 2026. Siemens Gamesa will use the elements to manufacture permanent magnets for offshore wind turbines assembled at its facility in Germany. I always feel like I'm reading a Dr. Seuss book when I get through to some of these rare earth miners. It's a tongue twister.
It is. And it's just worth noting that Linus also, which has been very much out of favour, was up about 4% today. And we've also, I don't know if anyone noticed, but Mark Carney, who used to be head of the Bank of England, who is also now the chairman of Brookfield, is in Australia and was discussing last night how much we need to spend in that space. And that, you know, we are talking lots and lots, billions and billions. But let's move ahead to...
Well, what was the stock of the day, of course?
Newcrest, all that glitters is gold.
Yes, and we had a bloke called Rudy Philippek Van Dyke. I think he's from a company called FN Arena. I'm not sure if you've met him. No. But who else did we have on there today as well? It was Mathan Somasundaram. How do I forget? They were discussing Newcrest Mining and the case for the stock, especially amid this new bid.
Newcrest is relatively well placed, and the market will assume that because Newmont is interested in any kind of pullback, there is a support there. So I'm a holder and in our models, and we remain positive on Newcrest. In the next 3 to 6 months, maybe 9 months, there's a decent risk that we'll see more upside in gold, and that could be a decent run. And where that goes to, I don't know, but I think the risk return is that the gold price goes higher from here. And that's what we've been playing for nearly more than a year, and we're happy to sit there.
If you're holding it, I mean, most of the gains are now made, I think. I'm pretty much, if I were a betting man, I would bet now that this is the final offer and we will see Newcrest disappearing from the market. That means that the helm will now go to Evolution Mining and Regis Resources, and they are a lot smaller.
Okay, so we had, well, first we're talking about Mark Carney, then Rudy Philippek Van Dyke. A couple of dreamboats really we're covering off in on the close of business today. We'll see if we can both get them in at some stage just for some Silver Fox action. But I wanted to talk about my view very quickly because, well, you help me edit these things every day. But I had a terrifying experience last week sitting on Twitter when I was perusing some music and thought that a new Jay-Z, I don't listen to Jay-Z often, but a new Jay-Z track had dropped. Sounds, well, I really was quite enjoying it until I realised that it was produced entirely by artificial intelligence. No human involvement at all. So I thought, well, I was so terrified of this brave new world, I thought I'd pen something on AI and, you know, made a slightly more sober and sensible point of, well, what's it going to do to all our jobs?
Yeah, and it's a really great piece, so everybody should read it. And I think what's really interesting that so much money has been running into the AI space over in the US. So Nvidia, Microsoft, Amazon, and the race is on with China. But I think there is a history that self-regulation doesn't always work, and B, this industry really needs to be regulated, and it is quite concerning when you have music that is written and potentially everything that we do. Having written a couple of books, I can now see that's going to disappear as well. So whilst it might be a favourite for investors at the moment, like everything, it's probably got a long way to play out. But also too, I think regulators, governments really need to take a close look at it, which is basically what you were inferring as well, Carl, weren't you? And it's this trade-off between US and China trying to get there first in terms of developing great AI, but what is the cost?
Yeah, absolutely. It's well, it's sort of scary, brave new world, and I don't know, The Matrix coincidentally came on last night. It becomes almost a real life horror film, so I turned that off reasonably quickly. Just can't deal with it. I'm a bit of a Luddite at the best of times though. But let's talk to some genuine and high quality human intelligence now. Martin Crabb from Shaw and Partners joins us at the desk for his Tuesday Hits. Really great to have you, of course.
Great to be here.
I invite you to try and craft a narrative around why we saw such a emphatic run up in the ASX 200 today, because we didn't have such a strong lead from Wall Street, but 1.2% gain. Can you give us an explanation?
The only thing I'd add to what you've already stated was just the setup going into the weekend. So remember that week closed trading on Thursday ahead of that payrolls number, and there was a risk that if it was a nasty payrolls number, you might get a bit of a reaction in Wall Street. And then we weren't going to open. They traded yesterday, so there was a whole session that you had to sit pat. So I think a lot of traders went into Easter, just squared their books up, and probably felt, no, I need to get my longs again. So there was some buying on the open, but I think the Newmont increased bid for Newcrest, that was announced pre-market as well, and everyone said we're off to the races. So the mining sector just all gapped higher, and as you were showing in your graphic, Newcrest itself was up, but everything else in the sector was. Because who wants to hold Newmont stock? I don't think a lot of people want to own Newmont stock. So there's tens of billions of dollars that's going to come out of Newcrest and go into the rest of the sector. So you take out Evolution and Northern Star, it's daylight to the next producer. So those two stocks are going to get a pretty big bid. And then early in the session, I think Penny Wong intimated that it wasn't just barley, that it might be wine as well. So TWE, Treasury Wine Estates, just as I left my desk, that was up 5% again today. Yeah. So again, there's this broader kind of, it's not just barley, it might be other tariffs, and it's also a thawing out of relations with China, which, given we're spending, $350 billion on submarines to
ward them off.
to ward them off, here we are sort of welcoming with the other hand. So I think that, a bit of, not so much short covering, but maybe reinstating longs from last week, plus those two big macro news. Push the market. Yeah,
absolutely. And of course, we've got the US inflation figure coming up on Wednesday. So everybody having gone long today, we might see it all reverse. But have you got any thoughts about what we can expect?
Yeah, monthly inflation data, it should be coming down, right, Danielle? We peaked at 9.1 back in June. This is a headline. And we know from base effects, if you think this time a year ago, Russia-Ukraine had just happened in February, oil prices had gone nuts, gas prices, pretty much followed. So we're certainly cycling peak energy prices from a year ago, but everyone will be looking to the detail, particularly on things like rents. Are rents starting to come down yet? Because that's 40% of the CPI. So a lot of market-based measures of rents like Zillow and Apartment List, they're all coming down, but the official data lags it. So we're sort of looking for that component in particular to start slowing. It was 0.76, I think, last month. So anything like a 0.7 or a 0.6 on rents is really good, because that'll see super core, as Jay Powell calls it, which is headline CPI, less food, less energy, less rents. That'll continue to come down as well. So I think this increasing narrative that inflation's coming down quickly. The payroll data did include wages on Friday as well, and wages came down. So kind of everything's setting up for maybe not a pause from the Fed, but maybe one more. And as you said, we had another central bank pause today, which is in Korea. So there's more and more central banks pausing around the world, which is the positive setup for the equity market. Like we're done on rates, we can now start leaning into the market again.
Yeah, absolutely. And I guess we'll all be talking about cuts once they start to pause, or at least, again, that continues to be baked into interest rate futures, which we'll point out in a second. But I thought it was really interesting, just a couple of charts. In fact, I guess you'd say ratios, if you will, between a couple of fund managers. It's, I suppose, confession season to an extent, and we're getting all these sort of fund figures coming out from some of these major players. And we were just sort of talking here potentially about, the shift in flow or investor preference perhaps when it comes to some of these bigger names, especially Magellan.
Yeah, so this is the gift that keeps on giving, the long GQG and short Magellan. So for those viewers who don't know, GQG is a global fund manager. It's come out of a lift out of Von Tobel a few years ago. Rajiv Jain's the guy who runs it, a bit of a rock star fund manager. So they published their fund numbers for March today, and they're up 3 or 4 billion, in contrast to Magellan, which published their data last week, which is down 3 or 4 billion. So money's going out of Magellan and into GQG. And Magellan was the go-to global manager for financial planners. You didn't have to do a hell of a lot of thinking. You just put the money with Magellan. A decade ago, it was Platinum. You just put your money with Platinum. That's all you had to do. So there was this huge period where all the money left Platinum, went to Magellan. We're now going through the second version of that, which is all the money's leaving Magellan and going into GQG. So that is a gift that keeps on giving. I think I sent you the ratio of Magellan to Platinum over the last kind of 10 years. it was basically Magellan massively outperformed Platinum for a while.
Yeah, it has
Yeah,
been.
there it is.
Yeah,
There.
Platinum's
So
been
You can see
struggling.
that Magellan did very well at the expense of Platinum, and now it's GQG.
It's funny, isn't it? Because isn't GQG, do they do a lot of bond portfolios, or am I a
No,
little bit off track on
Yeah,
that?
their expertise is emerging markets, but
Oh,
they've pretty much tapped out their emerging markets business, so it's developed markets now as well.
Okay.
Very nimble manager, very well liked by the Aussie market. Chose the ASX to list, probably because of the valuation of Magellan at the time, and attracting a lot of FUM in the Aussie market.
Yeah, and it is interesting because if we start to get rates coming down and you have seen some big tech stocks performing, well, typically you probably should see Magellan's portfolios do a little bit better. But once sentiment's turned, it's very hard, isn't it? It's a bit like turning a massive oil tanker. It's just people go, nah, poor performance
and
is gone.
it's that 3-year relative performance number, Danielle, which pushes a lot of investors to change their allocation. And obviously it's going to take you by definition 3 years to change that if it's been terrible for 3 years. So Magellan's got that anchor, if you like, that 3-year number, and they have to, I suppose, right side the ship, start adding value on a monthly basis, and then over time the outperformance will go away. But I just think it's a very easy decision for a financial planner to make, to sell an underperforming manager and buy an outperforming manager, even though we know the disclaimer is, they're supposed to mean revert. Reality is, and we've seen this in the superannuation industry, right, where underperforming funds are forced to close and to new members, and then encourage their new members to go to an outperforming fund. So it's this kind of momentum. But I think it goes to show that we're in a market that's probably not going to rip. We need to be picking stocks, and if you've got skill as a stock picker, you're going to get a lot more flow than just being a macro beta play, because you can buy the market for almost nothing. I think Vanguard dropped some more ETF fees over the weekend, so you can get beta for almost zero. So therefore you need to have this active stock picking approach to the market.
Yeah, there is a bit of a price war emerging, I think, in the ETF space from what I understand. So that's a fascinating dynamic in and of itself. But we alluded to interest rate futures just before. We might get the chart up now just to sort of illustrate a little bit the path forward as far as expectations now for RBA policy. And I sort of obviously talk to this chart if you could, but also just I suppose overlay it with the commentary of just hark back to a conversation we had last year where you don't start really going overweight until they begin to cut rates, because you start to look at a reflationary cycle. I mean, are you sort of incrementally, or perhaps the margins though, becoming more heavily allocated in equities now that we're looking at this dynamic we are on our screen, or does the earnings picture also play into that too, the growth expectations? Yeah,
very much so. So this is the bipolar nature of interest rate markets, right? So from the 3rd of March, so we're thinking a couple of weeks here before the Silicon Valley Bank Credit Suisse sort of situation, and business as usual, they need to keep tightening. We're going to get up to 4.1, maybe even higher on rates. And then obviously 16th, 17th of March, after that horrible weekend we had with Silicon Valley Bank, the market started price cuts in, which I thought was a bit crazy, but it was just reflecting what was going on more broadly. If there's a liquidity crisis in the global financial system, then central banks are going to be cutting rates, not hiking. We've now got rid of those cuts. So the most recent data there today is the RBA on hold with a small probability of some cuts running into the end of the year. So, given we've got 25 basis point increments, the next move down would be 3.25, 3.35 in December. So the market's now saying the RBA is on hold, which it kind of admitted to. Now I saw ANZ Bank, they had 4.1 as their peak cash rate last week. They've cut that to 3.85. They think the RBA will go in August. I know UBS, who we're close to, think the RBA will go in May. So there's most people are still saying one more hike. That's the economists. But the market itself is saying we are done on rates. So hence the buoyancy in the consumer survey. You'll see more people turning up for auctions. You'll see a bit more demand for credit in the economy. So you'll start to see a little bit of a recovery in sentiment on the back of that. If everyone believes the RBA is on hold, then you can start investing with a bit more confidence.
But if, let's say, so if the RBA goes on hold, which as you said is, what they've cited, but if consumer sentiment starts to pick up too much and housing prices pick up too much and all of those animal spirits start to perk up again, isn't that potentially going to then work against like what they're trying to achieve, getting inflation levels down to that 2 to 3%. So, it's a fine balance, isn't it? You overdo it, and then you have too much of an economic slowdown.
Yeah.
And the consumer is obviously, we've all been really well trained. There's a big muscle memory in there, isn't there, in terms of, rates coming down, we buy.
I think last time I was on here, Kyle and I were talking about him being the naughty kid at the back of the class and getting hit with a ruler because he was playing up too much. And I think it's a little bit like that. So we've hit Kyle with the ruler and he's starting to misbehave again. We need to hit him again. So that's your point, right? So if consumer sentiment picks up and spending starts picking up and we start seeing house prices move up, etc., the Reserve Bank's going to get the ruler out again and put up rates. So that is a risk. It's probably more of a risk in the US, I think, than it is here, but it's definitely a risk here.
True of macroeconomic policy and HR policy at Ausbiz is that it's if I ever misbehave, just whack me over the head. But just in the interest of time, we have to wrap up. Martin Crabb, Shaw and Partners, thanks for coming to the desk.
Always a pleasure.
Okay, well, let's, like I said, wrap things up and just have a bit of a look at what we've got coming up tomorrow. And I took out what we've got coming up tonight because it's actually really quiet on the calendar. We have a little bit of Fed speak tomorrow morning, which can always obviously rock the boat because we're still worried about the path forward for rate expectations. But other than that, ANZ Royal Morgan Consumer Confidence, which was delayed a day. We'll have Madeline Dunk on tomorrow to discuss that when it comes out, but might also reflect that rebound that we saw in the monthly Westpac read today. Other than that, it seems that we're really just sort of pushing towards the back end of this week, the CPI release, but then we've also got a whole bunch of US banks reporting.
Correct.
US reporting season is upon us again.
Yeah, and I think everyone is so tired of that CPI reading, people staying up to god-awful hours. Mind you, with the time change, I don't think it'll be as bad. But yeah, the market's very much hinging on that, and I do agree with the quarterly results starting to come through. People do hinge on every word that particularly the CEO of Bank of America and Jamie Dimon from JP Morgan, what they have to say. It's interesting that you have seen earnings forecasts for the first quarter come down to minus 6.8% according to FactSet for S&P 500 stocks. So they are starting to discount another decline. I think it was a 1% decline for the fourth quarter last year. But everyone's going to be wanting some comments about the outlook, and management may be deciding that they don't actually want to provide any outlook. So yeah, it's yet again data dependent and anecdotal evidence of what the companies are saying.
Okay, well, let's look at the leaders and laggards today. And we have gone through, obviously, some of the big movers when it comes to that gold space. Only one I can see there, just in terms of Newcrest Mining and the story we've covered ad nauseum, but it's worth mentioning again that Newmont has put in its best and final offer for the company, juiced it up just a little bit. So we've got that stock up by 5.25% for the session, but the broader gold sector also higher. When I left the desk, the All Ordinaries Gold Index was up by around about 3%, which is adding to gains that we've seen over really the last 6 weeks or so, probably been the shining light, if you want to call it that, of the overall market, but very resource intensive.
Absolutely.
Once again, a real
mining
sort of led kind of day.
Yeah, so Sandfire Resources, the last standing copper plays and nickel mines, interesting. So that a lot focusing in on those clean energy plays as well as looking at Paladin. So yeah. Interesting.
So, very interesting. I suppose that Paladin story is a fascinating one too. Down at 63 cents. Remember, a buddy of mine was, he held from about 5 cents or so and sold out at about $1.10. But okay, half of what it's worth. But 2 years ago. But if you're bullish on that nuclear play and you're high conviction, which you have to say, if you go around on Twitter and you look at those folks in the nuclear space or the uranium space, they are very bullish. They get very excited about the uranium. Well, this is probably reasonable value anyway. Up 5% or so for the day. Let's look at the laggards, however, and they were reasonably few and far between. Imugene down 10.3%, so that's a pretty significant hit. And we were going to take a bit of a look as to what was potentially behind that. I know Danny's just doing that now, but as she does, just looking across some of the other sectors, as you can see, for a day like today, fairly limited downside for most companies. Silver Lake Resources off by 2.54%, Fisher & Paykel down 1.8%, InvoCare down 1.75%. I don't know, on a day like today, people want to live longer. I'm not too sure. If we can live longer, our share portfolios are looking a little bit better. Therefore, we'll put put that off for another week or two if you're in that position. But yeah, Imugene, anything that we could see there potentially?
No, I can't seem to find
move.
anything at this stage. I'm sorry. No, there was some information out last week, but
yeah, I couldn't find it myself.
No, nothing new. Maybe it's a delayed reaction to what came out on the 5th of April. Yeah.
We'll have to keep an eye out for...
Small caps, sometimes they get whacked around for, no apparent reason.
Yeah, we'll keep an eye out if there's anything that hits wires about, I suppose, director selling or anything like that. And, well, maybe some news to come. You never know. Sometimes these funky kind of things happen. But anyway, speaking of small caps, we'll get to some of the big moves of the day. And my favourite stock, Jervois Global, up 30%, 9 cents per share. 40 Medical, that was another stock that we were talking about last week as well.
Yeah,
up 47.22%.
Wow.
So we'll look at the laggards too, just very quickly in terms of the small cap space. And can we get them or can we not? No, it doesn't look like it's there. No, that's fine. We'll just go for that. We'll stick to it. We'll remain positive. We'll focus on the positives there on the small caps side of things. But all right, there you go. That's the final, the close for the day for the CBO 200, up 1.4% for the session. A really, well, I suppose, great confluence of events there. Just a decent lead, some of that China news, as well as that Newmont, Newcrest story, bolstering sentiment and, well, seemingly off to the races to begin the week.
Absolutely, and good to see that the market held its gains over the course of the day. And of course, we will be waiting to see what lead we get from Wall Street overnight.
Yeah, as we return from, I guess, holiday trading conditions and we get back into the swing of things after the long weekend. But on that note, we may as well wrap things up. Danny, if you are watching, of course, you can catch up on all the news and interviews on our website and app. Until tomorrow morning, have a great evening.
Cheers.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.